Have you ever been caught in the middle of a conversation or an argument about how ridiculous it is that the wealthy people end up paying so little in taxes and that the tax system only favors the ultra-wealthy 1% and leaves out the middle class? I know I have. And the premise of that argument is false. The fact is, anybody can benefit from the U.S. tax system if they know how to play the game. There's no secret that the rich are hiding. The information is right out there in the open for anyone willing to figure out how to use it. Luckily, you won't have to dig through the tax code to find out about this tax secret that real estate investors use to pay little or no taxes on the income from their rental residential property. It's called cost segregation. Stay with me and I'll show you how it works. Hi, I'm David Weiner, Mr. Cashflow, and if this is the first time we've met, welcome. Please take a moment and hit the subscribe button or link so that you don't miss any of my videos designed to help you increase your cash flow, reduce your taxes, stay compliant with laws and regulations, and build your business. If this video in particular is helpful to you, please give me a thumbs up and leave me any questions or comments below in the comments section. I'll answer your questions personally. Cost segregation is a tax strategy that allows real estate owners to utilize accelerated depreciation deductions to increase cash flow and reduce the federal and, in many cases, state income taxes they pay on their rental income. This is done by breaking down and reclassifying certain interior and exterior components of a building, which are typically depreciated over 39 or 27.5 years for commercial and residential properties, respectively, to personal property or land improvements that are depreciated over 5, 7, or 15 years. This is all handled in what is known as a cost segregation study. These studies are best conducted by an engineering-based firm that specializes in deduction calculations and cost segregation studies. Cost segregation can reduce taxes and greatly increase the cash flow of a property, especially in its early years of operation. Thanks to the Tax Cuts and Jobs Act, used personal property placed into service after September 27th of 2017 is eligible for 100% bonus depreciation. That means real estate investors can deduct 100% of 5, 7, and 15-year property all in the first year. That's one of the things that makes cost segregation so powerful and can lead to significant tax savings. Of course, the structural part of the building itself is still going to have to be depreciated over 27.5 or 39 years, and the land remains undepreciable. Let me give you a scenario. Jane Doe, who's in the 24% tax bracket, buys a 24-unit apartment building for $1 million, places it into service in 2018, and doesn't utilize a cost segregation study. Her CPA determines that the following. The building is then depreciated over 27.5 years, allowing her to take $29,090.91 as an annual depreciation expense. Her income and expenses were as follows. Jane will have to pay taxes on the $90,909.09 received from the property. However, the depreciation expense reduced her tax liability by almost $7,000. And since depreciation is a non-cash expense, Jane will still have the $29,090.91 in cash. Pretty cool, right? Just wait. It gets better. Let's look at the same scenario a different way. Now let's say Jane decided to have a cost segregation study performed on her property. The study finds that the value of the property is broken down as follows. Thanks to the Tax Cuts and Jobs Act, Jane can take 100% bonus depreciation on the 5-year property and land improvements in the first year. The building is still depreciated over 27.5 years, allowing for an annual depreciation deduction of $13,090. That gives her a total depreciation deduction in year 1 of $453,090. Let's take a look at how that affects her income this time around. As you can see, Jane will show a net loss of over $333,000 in year one. That means she won't have to pay any federal or state taxes on the $120,000 of net income. That's $28,800 in tax savings that year. Plus the remaining $333,000 loss will be carried forward and offset income in future years. Now, how much cooler is that? The additional cash flow can be distributed directly to Jane or her investors. Alternatively, it can be retained for improvements and renovations that can increase the value of the property. Or it could be used as a down payment to purchase additional properties. Now, before you start dreaming about that vacation to the Caribbean, you're going to want to discuss with your tax professional if a cost segregation study is right for you. There is a cost involved with having a study completed, and the net benefit or lack thereof will depend largely on the property you own as well as other tax considerations. You don't have to be part of the 1% to utilize cost segregation and significantly reduce your taxable income. All it takes is a cost segregation professional that can help you decide if it's the right fit for your rental property and then walk you through and your tax professional together through the process. If it's determined that a cost segregation study will benefit you, go ahead and book that Caribbean vacation, courtesy of Uncle Sam. By the way, don't forget to subscribe to the channel before you head off to the Caribbean so that you don't miss when we post the videos on how to combine 1031 exchanges with cost segregation for maximum tax savings. Your property doesn't have to be over $1 million. It can be anything from $200,000 up, and so that allows the middle class to even take benefit of this. If this video has been helpful to you, please give me a thumbs up and subscribe again to the channel. If you have any questions about cost segregation or how it can be used, please leave me comments in the comments section below. And if you'd like to find out how a cost segregation study would be helpful to you, I can get you a free, no obligation estimate of the costs and benefits for your particular property. Just contact me at the information that's listed below, and I'll have it back for you in a couple of days. No problem, no charge. Cash flow strategies. It's your money. Keep more of it.